Just really quick on the real estate news, nothing kind of significant since last week when we did the news, but I would say definitely the number of people applying for mortgage is definitely going down. I was listening to an interview with Wells Fargo CEO, I forgot his name, but he said they are anticipating that this year their revenue from mortgage business would be 50% less than what it was last year. But keep in mind, I mean, the big part of that decline is going to be a lot lower number of people actually doing refinance. So that's going to have a bigger impact on their mortgage business than the new application. But definitely the number of new people looking to buy houses is also going down. So we'll see kind of, the interest rate, of course, is going to have a huge impact, but that's kind of what's going on in the market right now. We're definitely noticing a little bit of slowdown in our market. On the positive side, like more people, homeowners are a little bit more motivated to sell their properties because they feel like they've kind of missed the boat on selling at the top of the market, so they still want to try to catch the wave and cash in. So we're starting to notice more people be a little bit more motivated, more flexible with their pricing, with their offers, with their terms. So that's a good sign. But for us, because we don't really wholesale that much, we sell properties to either homeowners or we sell properties to turnkey buyers. So we're kind of just trying to get a sense of what's the sentiment from our investors that are looking to buy cash flow properties. And then what kind of, the homeowner market, which direction it's going in, just to see, which direction we want to go in with our investments. But we feel good about like staying in our market. Like an affordable home would be about 125 to about 175, 200,000 price point. So that's kind of what we want to focus on with our investment, because that gives us few different exit opportunities between selling it as a turnkey, selling it to a homeowner, and if for some reason we're unable to sell it, like I can keep it as in my rental portfolio and still have a cash flow positive property. So that's kind of what's going on. Anything else that you guys have to share? Anybody on this call, if you guys are noticing anything, any changes, positive or negative in your market?
I think the same thing as last week. Market is softening a little bit, and so we're actually getting price reductions, which is, I think if I remember correctly, yesterday I saw that nationwide 6% of all listings had to be dropped in price, which is record breaking. So a lot of homeowners are dropping that. So keep that in mind, guys, that if you're afraid that your buyers are going to be paying less, a homeowner is also going to accept less. So it's going to have an even shift. 10,000 one direction is also 10,000 on your buyer side. So don't worry about that, but just remember to have these conversations and start changing your script to include, hey, the market is shifting and what can we do about it?
Yeah, absolutely, man. Thank you for sharing, Jeremy. And one other thing, guys, to keep in mind on your exit is, one way to look at the numbers is, and I said it in last couple of calls, is when people are looking to buy a house, they're not necessarily, their price, what price they can afford for a house is actually based on what their monthly mortgage payment is. So somebody that was in the market at the beginning of the year, buying a house for $400,000, their mortgage payment based on what the interest rate was at the beginning of the year would have been about $1,400 on a $400,000 house. Now, the same $400,000 house based on what the interest rate is right now is going to be about $1,900. So that's a 40% jump in their monthly mortgage payment. So just keep in mind, like people, their income hasn't gone up by that much. The only real, variable that's changed is the interest rate. So all of a sudden, people who could afford a $400,000 house at the beginning of the year, now they're going to be able to afford a much smaller house, or a lower priced house, I should say, based on what monthly mortgage payment they can afford. So definitely keep that in mind when you are pricing out the ARV or the exit on your property, is what's going to be the monthly mortgage payment for this property. So typically when you're running comps on a property, you're looking at last 3 to 6 months, which is in this market with how much the interest rate has gone up in last 3 months or last couple of months especially. I would not look at a comp from 2-3 months ago and go plan your exit based on the ARV of the resale price of like 2 to 3 months ago. So definitely look at what the interest rate was 2-3 months ago and what the payment on that house was. So let's say if based on just looking at the comps, you come up with a market resale ARV of let's say $200,000. But look at what that house would have cost. A monthly payment would have been on that $200,000 house about 2-3 months ago, and what monthly payment, what house price you will be able to afford. So that's kind of what you should factor into your ARV, rather than just looking at the resale price or price per square foot, because those numbers are going to be dated. So definitely keep that in mind. Again, we have a house on the market. We still haven't been, and we've had a couple of showings, but we've been doing a price drop on it. So started out with 700,000, now we're at 670. We still have margin, decent margin on it, but we're going to continue doing $5,000 price drop until we get to a point where the number makes sense. So that's where, like, if you have a property that you're looking to exit, just always look at, if you're wholesaling, make sure you have do as much of assignment that you can do, rather than closing on a property hoping that you're going to be feeling confident that you're going to be exit at a certain price. Always get a sense of kind of what somebody else will be willing to pay. And then I think, Jeremy, you said kind of doing reverse wholesaling, based on or what a buyer would be willing to pay, and then kind of negotiate based on what kind of houses you want to look at. So for example, if a wholesaler came to me and said, hey, I want to buy, what kind of house you want to buy? So if I would tell them, all right, I'm looking to buy a 3-bedroom, 2-bath house that's going to rent for about $1,500, and the ARV should be no more than $150,000. Now, as a wholesaler, that gives him very specific criteria. Then he can go back to the motivated sellers, potential sellers, and then make an offer based on kind of what his end buyer, which would be me, would be willing to pay for that property. So something to keep in mind, guys, with your exit on these properties.